Welcome to the Statement of Cash Flows sections. What are the three sections on the Statement of Cash Flows under either method of Statement of Cash Flows? The three sections of the Statement of Cash Flows are as follows: 1. Operating, 2. Investing, and 3. Financing. What is considered to be an investing activity on the Statement of Cash Flows? An investing activity on the Statement of Cash Flows could include cash inflows and outflows related to the purchase and sale of long-term assets. For example, a CD or certificate of deposit for greater than a year. As you can see, I have a picture of Lizzo here. This reminds me that any of these activities are when we are investing in ourselves. We're investing in the company, we're putting money into the company, investing by purchasing something that will help us in the future. Further examples of investing activities include making loans to other entities or purchasing or disposing of long-term trading securities, available for sale securities, and held-to-maturity securities of other entities. So you might receive dividends or interest on these investments. How are dividends and interest received relating to investments treated on the Statement of Cash Flows? Dividends and interest received relating to investment activities are treated as operating activities on Statement of Cash Flows. So dividends and interest received are treated as operating activities. What are financing activities on the Statement of Cash Flows? My cue here is Cardi B, and I will explain this on the next slide. There's a clip out there of Cardi B, and she is giving advice to her followers about, how just life and financing and how she grew up not that fortunate and how she overcame that. Cardi B said that she would recommend going to business school and getting your business degree because that is so worthwhile to understand the finances of that. And I don't know, something about Cardi B just exudes business owner to me. Personally, that is my connection to her, not having followed her or knowing a whole lot about her. So, financing activities include anything that relates to the internal health and internal parts of the company. So when I'm thinking about Cardi B, business owner, I'm thinking about dividend payments, I'm thinking about common and preferred stock, borrowing and debt repayments, non-current liabilities, and equity activities. So what, as the business owner, do you have to do for your company to maintain itself in regular operations? Operating activities: anytime you spend money and it's not in the other parts of the thing, or you gain money and it's not any part of anything else that I just mentioned, falls into operating. Day-to-day activities, operating, daily expenses, daily revenue, all that jazz is going to be in your operating activities. Luckily, in accounting, we make it even harder. So there's two ways to report your Statement of Cash Flows: the direct method and the indirect method, and there will be a follow-up video actually to this. And there's direct method of operating activities. Most basic sense, you go your cash paid from customers, cash paid to suppliers and employees, interest received and paid, purchases and sales of treasury stock short-term, income taxes paid, and all other. And that's your direct method. And don't worry if you're confused, this is just a quick overview. For next video, we'll get more in depth. I genuinely don't know why, but I like the indirect method more. I think it's because I've worked with it more. So indirect method, operating section, start with net income. You adjust net income for depreciation and goodwill. You reverse income statement gain or loss shown on sales of asset. You subtract out changes in current assets, and then you add changes in current liabilities. We'll go through this again, just a quick overview. My phone does not want this example out. The company sells the building for $100,000. It results in a gain of $20,000. Net book value of the building at the time of the sale was $80,000. The indirect method was used. Where does everything go? Well, the company sells a building for $100,000. So the $100,000 sale of the building, a non-current asset, goes in investing. Results in a gain of $20,000. Well, gains and losses on proceeds of sale of non-current assets go into the operating section of the statement of cash flows. So $20,000 gain goes into operating, and the $80,000 doesn't go anywhere because it's a building. That's the value of the building, and buildings are not cash, so it doesn't go on the statement of cash flows.